Welcome back. We're going to look at exercise 3-14, in which we will again work on some adjusting entries and then prepare the adjusted trial balance. So let's see what information has been given to us right now. At December 31st, 2024, the unadjusted trial balance is as follows. They've given us various accounts. We have cash, receivables, prepaid rent, supplies. These are all assets with debit balances. We have deferred revenue, which is a liability with a credit balance. We have common stock and retained earnings. These are equity accounts with credit balance. We have service revenue that has a credit balance and salaries expense that has a debit balance. Now let's see what information has been given to us. The first piece of information says the balance of prepaid rent 7,200 represents payment on October 31st for rent from November 1st, 2024 to April 30th, 2025. So we have paid rent on October 31st, the 7,200. At the time we paid the rent, our journal entry would have been prepaid rent debit, cash credit, 7,200. How many months is this for? November, December, January, February, March, April. That's 6 months. 7,200 for 6 months. We are doing our adjusting entry on December 31st. So November 1st through December 31st, we have 2 months. So 2 out of the 6 months, or a third of this rent, has been used up. Prepaid rent, I'm going to highlight this because we will need to adjust this account in the adjusted file balance later on. Our journal entry right now is going to be, this is the adjusting entry. It's going to be rent expense debit and prepaid rent credit. So now what we are saying is we had already made the payment. It was a prepayment. Right now we are doing the adjusting entry. And for what amount would that be? That's for 3 months rent. Sorry, 2 months rent, 2 out of the 6 months. So 7,200 is for 6 months. So 2 out of the 6 months is 2,400. That much has been expensed. We're going to expense that. Let's take a look at the second piece of information. The balance of deferred revenue, $3,000, represents payments in advance from a customer. By the end of the year, $750 of the services have been provided. So we have deferred revenue. I'm going to highlight this one over here. Of this 3,000, we have done work for $750. So that amount can be recognized as revenue. So to that extent, my liability will decrease, which is deferred revenue. Deferred revenue that has a credit balance, I'll now debit it $750 to decrease it. And that amount now I can call revenues. I will call it service revenues. The third, additional $700 in salaries is owed to employees at the end of the year, but will not paid until Jan 4th of next year. So over here, what we're doing is we are saying that we have accrued these expenses, salaries expenses. We accrued it, but we have not paid it today. We have to pay it in the future, so it's a payable. And they've told us that amount is $700. That's $700. Okay. The last one is the balance of supplies. There's our supplies. We didn't have any. Yeah, we did have supplies over here. We had supplies of $4,000. This represents the amount of office supplies on hand at the beginning of the year. Okay, it represents the amount of office supplies on hand at the beginning of the year, plus, sorry, we had 1,700 at the beginning of the year, plus we purchased 2,300, giving you a total of 4,000. Of this amount, only 800 remains with us. Of the 4,800 remains with us. So what happened to the rest? Well, first let's do the math. How much is remaining with us? 3,200 is gone. I had 4,000. That's 1,700 plus 2,300 was 4,000. Of that, only 800 remains, which means 3,200 is gone. The amount that is gone is what's used up. That's supplies expense. And now I'll credit supplies to indicate that that balance has gone down. So there were 4 pieces of information for which I've done the adjusting entries. Now we have to prepare the adjusted trial balance. So before I can prepare the adjusted trial balance, what I will do is I'll go down the list of accounts and see if they were affected. And if they were affected, I'll need to come up with an updated number. If not, I can just transfer the amount. Cash and receivables were not affected. So I can put cash and receivables. Let me look at over here. Cash and receivables, I can put those amounts exactly the way they were, 10,000 and 15,000. Next is prepaid rent, but I highlighted it because prepaid rent was, I'm going to put these in different colors as I go along so we can follow through. So prepaid rent, I cannot bring the number 7,200 over here because 7,200 is debit. I credited prepaid rent 2,400. So what remains with me, I'm sorry, it should be a debit balance that remains with me, is 4,800. Again, 7,200 minus 2,400. What was used up? My prepaid rent goes down to that extent. The next account name I had was supplies. Supplies. Let me put this in a different color so we can look at it again. Supplies. Supplies was credited $3,200. I had supplies of 4,000. Supplies is credited 3,200. So how much am I left with in supplies? What I'm left with is $800. Again, if you go back to that information over here, that's what they told us. You are left with $800 of supplies. So we work backwards to figure out that 800. That's what's left. 3,200 was used. Okay. The next item, account name you have here is deferred revenue. Deferred revenue. So let me bring that over here, deferred revenue. And let me put that in a different color again so we can follow through with it here. Deferred revenue was $3,000. What did I do over here to deferred revenues? Deferred revenues was debited. Deferred revenue has a credit balance. I debited 750. So you need to take the difference between the two numbers. Credit is still the larger number. 3,000 credit minus 750 debit gives you 2,200 credit. That's a deferred revenue. So these 3 numbers have been updated. Then we have common stock and retained earnings. We didn't touch those 2 accounts. So those numbers are not going to change. They stay the same. The balance is what we had in the unadjusted trial balance, 11 and 6. You just bring the numbers over 11 and 6. Okay. The next number is service revenue. Now, service revenue, again, looking for a different color over here. Service revenue, I have 51,200 and I have service revenue 750. 51,200 is credit, 750 is credit. So add the 2 numbers and your service revenue is 51,950. Kind of makes you feel that T accounts are better, right? Salaries expense. Salaries expense is 35,000. And here you had salaries expense This is salaries expense is 700. Salaries expense, we had a debit balance of 35,000 and you're debiting salaries expense another 700. So you add the numbers together and you'll have salaries expense on the debit side. You add the two numbers and you'll get 35,700. Okay. So you brought all the numbers, all the account titles from the unadjusted trial balance to the adjusted trial balance. I highlighted those to indicate those have come through over here. Now you debited or credited some other accounts that were not there in the list previously. They have a balance now. Remember, whatever goes in the trial balance has a balance. It's not zero. Well, rent expense is, you have rent expense at 2,400. There's only one entry, so that's the number that you'll bring in here. Then you have salaries payable and supplies expense. Salaries payable, it's on the credit side, and supplies expense on the debit side. Now, ordinarily what you would see in the trial balances, the accounts are grouped. First you have assets, then you have liability, then you have revenues, then you have expenses. Well, I haven't necessarily gone in that order. You will see I have the salaries payable here. If I were doing this properly, I would have listed it under deferred revenue so that my liabilities could be together. But for now, it's okay, but absolutely make sure that you put them in the debit or the credit column correctly. Now, if you've done all our journal entries correctly and we have posted them properly, in this case, updated accounts, we should come up with the same number on both sides. Total debits must equal to total credits, and it does. It's 71,900. So however you feel comfortable, the adjusted trial balance is a trial balance updated after you have all the adjusting entries posted. So in this case, I didn't do T accounts. I just did a mental calculation and I said what the number should be over here. So that concludes this exercise and we are ready to move on to our next exercise.